Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I am here on Saturday afternoon recording with Barrie Hederachi. Barrie, how are you today?
I'm doing good.
Lots of interesting stuff to talk about today. As you and I were talking about, man, it's cross currents and cross winds and all kinds of ups and downs going on in the markets these days.
There's definitely a lot of that going on. And
And
unbacking and filling.
backing and filling and signs of real indecision and uncertainty in the way that price action is unfolding in a lot of different markets.
Mm-hmm.
And hopefully we can shed some light on what probabilities favor with our review this week. Let's start with Bitcoin. Bitcoin is sort of following the script that we've laid out, which was, when you get caught under these levels, you have greater risk of bad things happening. We started here talking about how being stuck under here creates risk, and the probabilities favor a move downward. Well, we got a sharp move down. Well, now we're starting to see a similar formation here around this half square level. A little over 50,000. It's tried for days to get above it, and it's getting stuck below it. And because when that happens, probabilities favor you. You got to look lower. The next move should be down to test this full square.
Mm-hmm.
It's not anything earth shattering, just the way we use our grids to assess probabilities. But by my reckoning, it's looking like we're going to see more weakness coming up in Bitcoin.
The thing to keep an eye on would be that half square level.
Yeah, the half square level. And by the way, all these levels are on a Google Doc spreadsheet that we post the link to along with the recording. And you can check out the levels for all the different markets that we talk about and all the ones we follow. Also, please make sure to subscribe, like, ring the bell, comment, all the things on YouTube if you like the content. It's the only way that we get feedback that what we're doing is on track and valuable. So the key level then for this week that we're watching is this 50,600 area. Below it, we're at risk of a sharp move lower. If we can get above it and sit on top, it opens up, going back up and testing the top of this full square around 60,000.
And that quarter level looks important too, at in the middle there.
Yeah, here. Yeah.
No, one down.
This one.
Next one down. Right there.
Yeah, that's around 46.3.
Okay. Yeah.
So
that looks like a good bracket.
Yeah, the weight of the evidence is pointing lower in Bitcoin. We'll see if they can rally. There's a lot of people on record saying 100,000 by year end. It's not looking too likely at this point, but we'll see if they try to push it higher into year end. Let's flip it over to you, Barrie. You get a quick review of the big five and see what happened this week and what you feel probabilities favor happens going into next week.
Okay, let's do that.
Man, your brackets are right on target again this past week. Look at how you caught the low, you caught the high. It's good work.
Thanks. Now this brings us back to an interesting point. So you guys, everybody that's watching, if this is sort of like a story. Every week we talk about the chart and we sort of continue from where we left off. So if you guys need to, and to keep these short, just catch up. If you just only following the E-mini, for example, just go back and check the E-mini segment on the last few and you can catch up, and you can do the same for bonds or anything else, commodities, everything that we're doing. That's a quick way to catch up.
Mm-hmm.
That said, the low came in pretty much where we called it. And
that 44.90 level.
Yeah, that came out pretty well. And also last week, we looked at this chart. Mm-hmm. And the important thing here, we talked about it last week, so I'm not going to go into it, but it's about this, coming back to the 1/3 of the square, 1/3 by 2/3. And I was explaining how that's really good support and that we could have a low in place and to watch that low. And of course, that held pretty well, and we rallied off of it fairly strongly in the early part of the week, and here we are.
Mm-hmm.
The second thing we talked about last week was if we take off and we clear the halfway, 50% of the square, this 46.93 level to be sort of a resistance area. And as you can see, as you saw, we bounced off against that pretty much all week, up and down around it, but really couldn't settle above it.
Mm-hmm.
Except for the last few minutes on Friday.
That was really something, huh?
Yeah. So, last hour we pushed it up there, and that's all right. We can count that in.
Mm-hmm.
For next week, I don't think we're out of the woods. The number to really watch is 47.26. Normally I would say 47.50, but I don't think that's the number. 47.26 is the area we want to watch. And we might do the same thing. We might go up here and hang around. Sort of the trigger to see if we're going to go higher would be penetrate the 47.26 and be able to hold this 46.93 area on any kind of a pullback, right? So we want to make sure this area is solid. And these two levels would tell us that. And this is another chart. This is square 72 coming off the COVID lows. And I pointed this out, how 30 by 60 and how we also had support here. And this is really strong. And, if it holds, we're going to have a strong move out of there, and which we did. So looking at this square, the next major resistance is way up here around 4,800.
Mm-hmm.
And that could very well be. So keep an eye on that as a sort of a long-term target. If we can clear these levels that we talked about, which would be 47, starting with 47.26.
26, yeah.
Mm-hmm. And just to take a quick look at weekly charts. So here's the weekly S&P.
Bumping up against it again.
Bumping up against it. This is square 52. We are 3 squares up. And I mean, really pushing it, eh? So,
Mm-hmm.
Either we're going to really push and sort of clear that resistance, or we're just going to sort of give up.
Mm-hmm.
So,
Right.
And a weekly, for most of us that are actively trading, weekly is not enough, but it gives you a snapshot of where kind of things are. And that's the important part there. And the way we keep track of the, lower time frame levels, will be using these level brackets that we use on the daily.
Barry, go back to that weekly for a second, because that's a perfect picture for the conversation we had multiple times this week, saying, man, this trading, it's listless. It's like holiday trading, because it was banging up against this thing all week.
Yeah. It's actually last few weeks, right?
Mm-hmm.
About a month, about 6 weeks. So yeah, that area has been fairly solid, and so that's why it's really important to watch it this coming week,
Mm-hmm.
to see if we can take it out or not. And that's the sort of the micro, zoomed in shot of that activity, right around that same level. So,
Mm-hmm.
So 47.26 thing to watch. And other than that, the flip side is if we lose 45.93, then we'd expect another run back down and possibly test this 46.25 area.
Mm-hmm.
There's a 100-point spread right here between these two. All right, moving on to bonds. Not that exciting, but the exciting part is our level held. The support level we gave was 160.20, and the bonds came back, banged around there towards the end of the week. Held pretty well. And I'm guessing that's the level to watch next week as well. And we have this trend line that's working it. But I think 160.20 is really key level to watch. I know you're going to talk about bonds. Are you talking about bonds this week?
Yeah.
Okay.
There's a level that if we can breach it, there's going to be a decent trade, I think.
So 160.20 is a key level to watch for support, meaning if it gives out this time, we could probably see lows that are going to go and test these down in the 50s.
Same old grind, isn't it, there?
Same old grind, man. Look at that. We had a break of this trend line and we thought it could take off, but we're in this bigger bracket of just sideways chop, in the big picture. So not much, we're just stuck in there. So if anything, if we fail here, we're probably going to go down to this 58.28 area, or maybe even lower. If that gives out, then, and this level gives out, then we're talking, it's got all kinds of room to run below, if you notice, right? See how this trend line's kind of holding everything up? Almost a year's worth of price action, right?
Right.
So that's something to keep in mind going forward. So crude, another market we've been pretty good with. If you guys look at the last couple of weeks, we looked for support down here. And last week we talked about if 69 is cleared, then we're probably going to pop up and probably go up to 77. And we have the quarter square right here where it got stalled. But long as we're above 69 now, it's in a strong position and could go ahead and see 77. And if you're fairly short term, keep an eye on 72.84. That's the quarter line here. So if we clear that, then 77 is within reach. If we don't clear it, then we might go back and test 69. So that's sort of the bracket there. Weekly crude, again, we drew up this box a couple of weeks ago looking for support. We got the support, it's bouncing off. Not much to say. The key thing to watch here is if this pullback is going to be a lower high, or if it's just a normal correction like we've had the last few times. And the way we're going to watch that is through the daily levels. So that's why we're watching 69, 77, and the 72.80 area closely. So those brackets help us figure out which way the moment, market's pushing.
Crude is showing, and I'll briefly touch on it, similar pattern to a lot of the other sort of economically sensitive commodities, the metals, copper, gold, silver, crude, gas. They're all looking like they've corrected and they're continuing in some sort of consolidation with potentially another push lower. So we have to watch them. And I think, as you said, you watch the daily levels and then you can see whether things have turned and a good low is in, or are we just doing another counter trend before another move lower?
Right. Moving on to gold. I think we were laughing last week, thinking how it's holding on by its fingernails.
Yes.
And not much has changed. We're
No.
still holding on by the fingernails. But our support level is proving to be fairly good, 1765. That level held and markets holding well above it. So it's, I would say, more bullish than bearish, given that it's still within the frame of the bigger fork that's pointing up. Until this 1765 gets taken out, I think the trading the long side is probably not a bad idea. If you're going to trade it at all.
True. I've got a chop zone right now from like 1835 to 1744, and we've just been grinding in that area for over almost a year now.
Exactly. So here's the weekly chart. Again, we talked about how it's sort of coiling up, getting into this triangle, and that triangle is getting tighter and tighter. And it's easy to think that it's going to, at some point it's just going to break, and this kind of a coil is going to break hard. And I can't imagine it's going to break hard at the downside. So keep an eye out. And that's why we're watching all these brackets and the levels to see which way the market's shifting.
Also in gold, as well as these other markets, the commodities especially, don't be surprised if there's not some sort of clean out low where they pull the stops and take the, do a false break before the big move. I can't tell you, if you go back and look at your commodity charts, how many times before a sustained directional move it does that.
Right. And that's why you might want to duplicate these lines, like this trend line and all the trend lines that we show here, because it'll help you kind of frame the market and have a good, have a fairly decent idea of the pressure and which way is shifting. So that's gold. we've been bullish the dollar, and dollar's been behaving in the same way.
It's triangulating there, isn't it?
It's triangulating in a fierce way.
Mm-hmm.
But it looks like it wants to correct and check this 95, which was our target for a long time. If you go back and check our videos. And so it's possible we do like an ABCD and check this and go from there. So not much action, not much to trade last week. It's fairly tight. Here's that triangle you're talking about, Ben.
Mm-hmm.
So, I mean, that's about as tight as it gets, right?
Mm-hmm.
When you can draw it with just a couple, 3 days, highs and lows. So I would watch this tightly. I'm looking at 95 to be support if we come down. But other than that, I would look at this lower trend line to hold and the dollar to continue to be bullish. You know, I drew in this 99 as a potential long-term target. So that's still on the board. All depends on how we do after this correction here. Going back to the weekly, let's take a quick look. That's right, the fork. Mm-hmm. So yeah, we came up to 60 by 45, 45 mm-hmm. by 60, mm-hmm. and pound resistance. So that's a fair square.
Good square. Yep.
Yeah, it's a decent square. So it now here's the important thing. You know, we had the square, we hit the fork, and we didn't sell off. You know, we didn't get 2-3 weeks straight down. We're consolidating. So to me, it points to
it's bullish. Yeah,
it's bullish, it's strong. So it's holding. And when it holds like this, you really don't want to be shorting these things either. Mm-mm. Yeah, you don't want to be shorting these tight consolidations after a square and with the fork. But keep in mind, you know, we did square out, and it's possible that we pull back a little bit. And that's why we're looking to see if 95 would hold if it comes down into that level. Mm-hmm. And as we always do, take a look at the euros. Not a huge difference from last week. We hit 1.5 squares for support, and we came back to the quarter square. And we're expecting it to consolidate in this zone. Last couple of times we looked at this, and nothing's really changed. I think that's pretty much the case. We're probably going to consolidate in here for the foreseeable future until, you know, the dollar takes out a couple of these key levels, right? Mm-hmm. So not much to do here unless it takes out one of these levels.
You know, what's interesting in looking at all these markets is that there's all these triangles and coiling and consolidations right as we go into a Fed week and the decision from the Fed.
Exactly. Well, that's what it is, right? That's why the tight dollar triangle.
Absolutely. Mm-hmm. It's all like building up pressure. Yeah. It's building up pressure for that news release, right? Whatever the market's going to do, it's building up this pressure to release it on that news.
Yeah, very tight. Mm-hmm. So same thing for the euro. Well, we talked about the support on the weekly at the 1/3 of the square. That's that green line here. Hope you guys can see that, the green line that's going across. And that's around 1. So we held there. We definitely have resistance up in the 150. So we're looking for sort of a tight consolidation here. And if these lows go, we're looking for much lower prices. Probably go ahead and check last year's lows. Mm-hmm. And if we get about the half square, we're probably going to go higher. So, but for now, it's just a lot of going nowhere. Kind of sums up last week.
Yeah, absolutely.
Well, that's all I got. Let me throw it back to you. We'll look into the exciting world of commodities.
Yeah, we'll see what's happening.
Boy, the nail biter continues.
Yeah, isn't that something?
Doesn't quit.
Nope. Before we jumped into the commodities, I wanted to take a look at the NQs. 2 reasons. One, to see, you know, look at this level where we're just continuing to probe it, but not able to get above it. If the market's going to take off, we'll know, because it's got to get above this and it's got to sit on top of this level. Again, the levels are in the spreadsheets, but this one is around 16,420. That is key in the NASDAQ. And the other reason why you want to look at this and watch the NQs is they're holding up the S&P. If you look under the hood and look sort of at the non-big tech stocks, there's a lot of selling that's been going on underneath the hood. So we want to watch this level. If it can't get above it, it's a sign of weakness, and you're looking at, testing these lows of the half square. And clearly, if we can take out those lows that we made last week, a week ago Friday, then you're looking at the bottom of the square here around 15.2 as the next support. But this level up here, the 16,420, needs to be taken out if we are to make any meaningful upside. And it's trying. It's definitely probing. So we'll have to watch that this week. That's one of the things I will be paying close attention to. One of the markets that Barrie mentioned, and reviews each week, is the 30-year. I'm highlighting it because I feel like there is a potential fast move trade coming in this. Last week, we broke out, closed last Friday above this full square, made a higher high. Everything looked great, like we were heading up, and this thing was going to, move higher, and, was a good long trade was imminent. Well, the new week came. We lost the square. This is now looking more and more like a false break up here. We came down fairly fast and then pulled back for a couple days on Thursday and Friday. If we take out this half square in the sort of 160 area, 160.01, 160 flat, if we take that out, I feel like the next move is going to take us down to the bottom of the square, which is around 56.17. So I'm watching bonds this week to see if we can, first of all, obviously take out these lows, from the previous 2 days, but more importantly, take out the low of the half square. You can see the last time we were testing in that area, it held that pretty well and then was able to make a move up to the full square. If we lose it this time, I think we're gonna see this. Odds favor that. So I'm watching bonds for that potential move. A group this week that stood out for me was the grains. Overall, in the commodities, the majority of them, meaning 80-90% of the ones that I follow, are in some sort of consolidation and correction off of a high made. In the case of gold or silver, the highs were 18-20 months ago. In the case of natural gas, the high was a month and a half ago. But they've made highs, and they've either been correcting or they're starting their corrections. A lot of them are late in the correction, meaning there's like probably one more push lower. So we're watching those, looking to see if we can see, a bottoming pattern. If we hit a decent level where it makes sense to start, looking at the next leg higher. But most of them are in a position where, it doesn't make sense to go into them. The grains, however, all three of them in the review this week popped up that they're in a position where the potential for a fast move is there. And so I want to go over each of them. First up is wheat. As you can see on the daily here, wheat made a very nice move up, which we rode up this move higher, right into the half square. Could not get above it. So what did it do? It sold off, actually couldn't even hold the full square, came down to this half square, held, bounced, and I believe we made a good structural low here on Friday. And you can see where, as you look to the left, where those prices correspond to. The August highs and the April-May highs. The key for wheat is we want to take out this half square. This is at around 788, 789 level. If we can get on top and sit on top of that, it looks like the all clear for the next leg up in wheat will be happening. Anything you want to add on the wheat, Barrie?
Well, I think that half square is the key to watch. I think keep things simple, but also keep it very clear as a
Mhm.
marker.
And we had been leading this group, which was interesting that it corrected more sharply while sort of beans and corn were sort of stair stepping slowly and steadily up. But it looks like with Friday's price action, we may have gotten a intermediate low here in wheat. Next one we want to look at is corn. All week, I posted something on Twitter and been speaking with Barrie about it. I'm like, man, this thing looks good. This thing looks good. This 590 area, we got to clear 590. We got to clear 590. Well, as you can see, we closed Friday at 590.50, right on the critical level. So this next week, if we can get on top of that level and stay on top of it, corn looks ready to run. You can see, the pattern we look for is we want to see a low and then a series of highs, higher lows, higher highs, higher lows, higher highs, higher lows, and it's sort of building energy to release for a fast move and a wave 3 type move. So this week may be the week. Let's see. We know the marker. 590 is the key. If we stay on top of 590, the first target we can look at is around 625. If we clear 625, then we're looking in the 660 area, 661.
Good call.
So corn looks good. Love the pattern. This is a very bullish pattern. All week we were testing here and just sort of, it almost feels like this is muted action, like it's like being controlled before they really unleash the buying. So we got to watch that this week. We could see the breakout in corn this week. The laggard in the group has been beans. That being said, beans did a lot of really good things this week and are pointing towards higher prices. I mean, the odds based on this formation and what we're seeing are really looking like we could see higher prices in beans here soon. To review the formation, we had a low initially, a very good low right on the half square, good push off, tried to go above, couldn't, came down and did a little false break here. This is exactly what we want to see. We see a false break on support, and then we see a strong push off making a higher high. So we had a low, we had a high, we now have a higher low. This week, we're checking to see if we can get another higher high. The 1275 level is really key because on the longer time frames, the weekly and the monthly, it's an area of resistance. So I'm watching 1275 this week, in addition to the full square, the half square level here at 1296, and obviously the full square here around 1240 for support. Beans look good. The ideal scenario would be we break the trend line and we break above the half square. That would show good strength and probability of higher prices, getting up here and capturing the full square, which is around 1350, 1353. Anything to add on the beans?
Other than watching paint dry. It's been like that, but I think, all these things come to an end. So it looks like it really wants to push. So, and, if you draw a trend line from that July high to the November high, we broke that. We're kind of grinding out of that. No,
Yep,
the July high. Sorry, November high.
November high, yeah. Okay, here.
That one right there. Looks like we're grinding out of that. So that's sort of a first sign of something, breaking through.
It's the thing I liked, as we discussed before the show today, it's not one of the grains that's looking good and the others are looking really weak. All three of them have synced up. And when that happens, you can get really powerful moves. It tells me money is coming into this group. In addition to these individual names, I'm going to have to check and see when the next crop report is, because there's somebody who and some big money wants to be in all three of these groups, and when we saw it in the price action this week. So,
also on this, you can see how the pressure is building. If you take the tightest trend lines and go upwards, like you have the most outside one. That's the
Mm.
last one to go, coming from the high, May high, right?
Mhm.
But if you take the one from August high to the that first November high, that broke first, right?
Yep.
That
That
one
broke.
broke,
Mhm.
and then the other one broke. One from July high. That second set broke. So they're all slowly starting to crack,
Yep.
and
It's a sign of accumulation for
yeah,
sure.
it's there's definitely pressure, and money's definitely not leaving it.
No, nope. And it's coming, as I said, all three of these grains are seeing money come in, which is a very positive sign. The last thing I want to do is do a review of cotton. And the reason to do a quick review of cotton is I feel like another one of the softs is setting up for a potential similar move. And we can actually make a nice counter trend trade if the setup continues. So cotton, we've talked about. We were able to catch this move, sold too soon here, didn't catch the full move up here, but made good money on catching this move. What we saw with cotton after the high was we had a pullback, which is normal. You expect a pullback, right? And it was dancing around the line here. The troubling part when Barrie and I were watching this, and I discussed it with him, is I said, man, we pulled back and we made a lower high right into resistance on this full square and couldn't get back above. And what happened next is we had a little consolidation, and then bam, big move lower. Right now this is sort of a good example of what a lot of these commodities are doing. We've had, a pretty fast move down. They've pulled back and they're consolidating, but most likely because we're consolidating under this full square, there's another push lower here. So why are we reviewing cotton? The horse is already out of the barn. Well, the reason is based on the chart pattern, the move, some squares that we hit, where resistance came in, coffee is setting up to do something similar to what the pattern we just showed you on cotton. So coffee, we caught this move up, was pissed off because we sold here and this thing kept going up. So we didn't get the last bit of the move here. But what has happened is we hit the resistance at the half square, had a first sharp pullback, found support where it should on the full square. If we lose this full square and get stuck under here, which this level's around 230, 231, 232, if we get stuck under that, the probabilities will favor we're going to get a fast move down. It can either go to the half square, which is around 210, or if it really wants to get going, we could see a full square move into 186. Most likely, I think we're looking at the 210, 211 area because there's support on a monthly basis and a weekly basis with previous highs, including the July high there. So coffee is one that I'm watching this week. Still very bullish. Anybody that watched the monthly video last week knows that the commodities are all extremely bullish in the long term based off the monthlies. What we may look to do, because the risk reward setup could be super favorable depending upon how this next week plays out, is to make a nice counter trend trade, catch a fast move down into support, then cover and see what comes next. What are your thoughts on the coffee, Barrie?
Well, I think that square level is the key thing to watch, and it wouldn't be out of order to come back and check the old highs, or at least the breakout apex over there around 200.
Mm-hmm.
So you already got it drawn in. So somewhere between that apex and the half square is fair game. I think it would be a normal pullback.
Exactly.
And so we'll probably have a trend line right about there, or you should just touch or just kind of maybe fake break a trend line.
Mm-hmm. That's right.
You draw one from April and July lows, then that.
Yeah, it probably does give it to you right in that area.
Never know, right?
Never know. Never know.
Now, if you take that trend line and place it at the September low, that'll line it up. Grab it with the truck and
Mm-hmm.
There you go.
So that's the idea.
Mm-hmm.
We're looking, and the key thing is, you got to trade the whatever the the market tells you the odds favor, right? I'm bullish on the commodities long term, but I'm not going to, ignore a good daily setup with a positive risk reward ratio. And that's what the potential is there for, which is why I wanted to show it to you and bring it to your attention. This week obviously is going to be a very hectic and busy week with the Fed announcement, the meeting Tuesday, Wednesday, and the announcement Wednesday afternoon. So study your levels, manage your risk, and this is what we want. We want the volatility, and hopefully, come Wednesday, we'll get it. Anything else you got to add in terms of what you're focused on this week?
No, I think we talked about enough things. We don't want to overcomplicate it, but just talk about just what might be important to watch. So we're good. I feel like we covered what's important. So
good. Well, have a great week, everybody. Barrie, have a good week, and we'll talk to everyone next week.
Thanks.